Making money from the stock market is not as hard as they've made it seem to you. One of the most important skills is being able to identify opportunity ahead of time and positioning yourself for that opportunity and waiting, being patient to see that opportunity mature. So I'm going to give you 16 boring penny stocks that can quietly make you a fortune in 2026. But I want to first of all say that this is educational purposes only. It's not a buy or sell recommendation. You know, penny stocks can be very, very life-changing. They can return dramatic returns, 1,000%, 2,000, 4,000%. But it can also be very, very devastating in terms of the losses you can incur. So follow the information carefully and also do your own research. As at the time for doing this research, this was on the 7th of January. We wanted to look at stocks under 10 naira in the Nigerian stock market. Those are penny stocks. And then I had to find a way to filter them and then apply 7 rules to make the list of 16 that are very likely to explode your fortune this year. So out of the 150 or thereabout companies in the Nigerian stock market, 53 tickers are under 10 naira as at 7th of January. Now we applied these 7 rules and then extracted these 16 that I'm going to share with you. I also would like to talk about the 7 rules so that you understand the background and the context for getting this. By the way, let me say upfront, I'm not going to be reading everything on the slides, but I'm going to share the slides with the Financial Fitness Mentorship, my mentorship group. If you want to find out how to join, go to the description section of this video and then you can join. Because this PowerPoint is very, very rich and is actually something you want to keep by you. Because in each of the stocks that I'm sharing, there's a lot of information, research and sources that I won't be able to read here, but it will be available for you to download and then follow it and then use it to plan your wealth for 2026. So there are 7 core rules that we use in making the selection. The first one is that there's a visible turnaround trigger for the company, the 16 companies that we have here. So it's not just something read in the news or being speculated, but it's actually a dated change, or there's a contract, or there's a new plant in the company, or there's a new ownership, or there is some restructuring, some new management, new directors, or things like that. That is one of the core rules. The second core rule is there's a sector tailwind. You know, the stock market is made up of different sectors. You have agriculture, you have oil and gas, you have insurance, you have banking, you have manufacturing, all kinds of conglomerates. There are different sectors. So we were looking at sectors that have tailwind. What is tailwind? Tailwind is the force that pushes, if you look at an airplane, for instance. So if the airplane has some good tailwind, it can propel the airplane forward. So tailwind is those triggers, those propellants that are likely to make that sector, the entire sector, to do very well. It might come in form of government regulations or some reforms or some structural demand that will push the whole space in that sector. The third rule is survivability. The company must survive. It must have the muscle to survive, because you don't want to invest in a company that will start collapsing tomorrow, always needing money, but never producing cash flow. The other one, which is a very important rule that I applied in making the selection for you and for me, is insider or institutional alignment. Because institutional investors are usually a very, very powerful indicator that there is something about a stock. When institutional investors begin to position, or you see directors in the company, or you see pension funds moving to a particular stock, then you know that there's something that they saw ahead of us, because the institutional investors actually have more data, more information, better forecasting tools, and resources to be able to make this decision ahead of individual investors. Then there is a clear re-rating pathway. What is re-rating? The sentiment, how people begin to feel about a particular company or about a particular stock. What headline must change? Maybe there's some kind of profitability, some kind of turnaround, some kind of contract execution and all that. So I looked at all that in making the selection. And then the sixth rule for making this selection is liquidity. Liquidity means when can you trade that stock easily? Can you buy and sell it easily? Because you are not wealthy when you have a stock, lots of it, but you can't sell it when you want to sell it. So that is liquidity. And then there's also the consideration of time. Time is very, very important when it comes to investing in the stock market. Of course, the stock market is not a get-rich-quick framework. So it's a place that you don't want to put your rent money there or your pocket money there. You want to invest in these stocks and give yourself some kind of 18 to 36 month window for these penny stocks to compound and to surprise you. Now, for each of the penny stocks, there is a legend based on all these rules, all these 7 rules. Under each of the stocks that I'm going to recommend shortly, you will find this legend. Green, I believe that is amber, and then red. So the green means that there's strong evidence in that particular rule. For instance, if you are talking about liquidity, and if liquidity is green, then it means that there's a very, very strong evidence of liquidity for that particular stock I'm recommending. If it is orange or amber, you can tell me what that color is. My wife is better at colors than myself. But if it is that orange looking, it means, well, it needs more proof. The company needs to produce more proof. If it is red, then it means that the context, the thesis, the theory for choosing that particular stock is very, very fragile. That's what we're going to use in all of them. So I'm going to go ahead and give you the 16 stocks that can make you a fortune in 2026. And the very first one is Tantalizer. As I said, there's a whole lot of information in each of them, which I'm not going to be reading. I will just give you the key information, why it is on the list. Then when you get this PowerPoint, spend some time to study it and check all of it. So if you look, each of the slides has 4 parts, or 1, 2, 3, 4, 5, 6, 7 parts. So the first one is why it's on the list. The second one talks about the catalyst. What must go right? What must be true for that particular stock to break out? Then the third part talks about the risks. What are the risk triggers? Like what can break the story? This is why you need to have this slide so that you can watch it. And at the end of it, I'm also going to give you, for those of you in the Financial Fitness Challenge, I'm going to give you a 1-page monitoring system for being able to monitor all these things. Now, the next part of the recommendation is verified evidence. So that's where I looked for information for disclosures on the NGX website with ProShare, with Nairametrics, with investing.com and different sources to compound the information. Then the next part talks about the policy and the micro tailwinds. What are the policies? What are the macro economic conditions that can push this stock, for instance, to go from 2 naira 90 kobo, who knows, to 29 naira, to 15 naira, who knows, to 200 naira. Nobody knows, nobody can predict the market, and nobody can tell you for exactly sure that this is what the price would be. But if you look at this, the last part of the presentation for each slide, for each stock, you will see that legend I told you about before. You can see the turnaround, tailwind, re-rate, liquidity time is all green. So this one looks really, really amazing. It's almost all green. Now, so Tantalizer is here particularly because it has changed its business model. It used to be a fast food restaurant or a restaurant, but right now they are going into entertainment, and then they're also going into the blue economy. So they have a 5-year offtake agreement that's proven, verified, with Harvester Fisheries in the United States to supply them shrimp, prawn, and all that. And it's in the multi-millions of dollars. So it's a fantastic positioning because they are going to be earning money in dollars. And again, they have a contract that's already certain that will last for 5 years. So this is one of the strong recommendations. And then we come to LASACO Insurance. You can also see a couple of greens and then ambers at the bottom of the slide. Why is LASACO here? There's the same reason that other insurance stocks that I'm going to mention are here. So there is a very strong sector tailwind, which is bigger than just a particular company. And this has to do with the recapitalization requirement for insurance companies. And this has to happen, I believe, sometime around June. So they have up to that time to consolidate. So it is there. Not only that, when that the police force and then the FRSC starts implementing this new insurance policy, which actually makes it mandatory for certain kinds of insurances for individuals, for buildings and for all kinds of things. That is a lot of cash flow for LASACO, and it is actually doing very well. Its financial disclosure in NGX has been very, very good. So that's a stock to watch. As at the day that this was done, it was trading for 2.75 Naira. The next one is very similar to the same narrative with LASACO. This is Cornerstone Insurance. So there's a recapitalization. And not only that, the Cornerstone is having a very strong re-rating. So it is benefiting from the same insurance reform. And then the next one, which is one of my favorite, if you look down, you will see a lot of greens. So this is UPDC REIT, Real Estate Investment Trust. And it's on the list because it's got a very strong re-rating path because of its yield and because they're also very consistency in their distributions, in paying the investors dividends. And recently, UPDC REITs changed management from IBTC Asset Management that managed it before to the same people who manage, I believe it's SFS Right or something like that. So I need to check up on that. But this is a very strong candidate at 8.25 Naira. Then you have Nymeth. Nymeth is here because of the local manufacturing policies. So there's this NAFDAC policy between 2024 to 2027. They have a strategic plan to strengthen local manufacturers and then enforce actions in the pharmacy market. So he's benefiting from that. The other reason Nymeth is on this list is because recently, according to Business Day report and the company's statements, they have a new plant at Amobia, which is in Anambra State. And they are positioning it to take advantage of Africa-wide market. So Nymeth might be a miracle waiting to happen. The next one is FTN Cocoa. It's on this place because global cocoa deficit creates a very strong price tailwind. And again, it has a lot of policy support because the non-oil export narrative remains the priority of this government. And so cocoa processing is aligned with the value add export goals of the government. So it's got a very strong policy tailwind. But you also need to study the risk triggers, what can break this story. But for right now, at 6 Naira, 1 Kobo is looking good. The next one is University Press Limited, or UPL. I think it's actually PLC. And why is it on this list? As at the day of this research, it traded for 6 Naira. It's here because education is being overhauled by the federal government as of September 25. So there's curriculum overhaul, reducing subjects, emphasizing skills, and then there's a rollout that is going to happen within 2026. And this means new textbooks are going to be published. It means that so University Press will be having a lot, converting the curriculum change, because if new textbooks are being published, that's a lot of business. So there will be higher sales and margins. And then in addition to that, there's also a World Bank education support. The World Bank has approved $500 million for the education sector for within Nigeria. So textbook procurement planning appears in World Bank supported education delivery program implementation. So UPL might also be positioned to explode within the year. The next one is Sterling Bank. And Sterling is here because, first of all, they have restructured as a holding company, meaning that Sterling is going to be free to go into other segments, other kinds of businesses, other verticals, apart from banking. And then, of course, they are going to benefit from the higher minimum capital requirements, and the capitalization is possible because they can do rights issue, they can do M&A. So, and liquidity right now is very, very strong in Sterling. Very, very, very strong in Sterling. So that's another stock to watch. The next one is Caverton. Actually, I'm looking at Caverton very strongly. Caverton is here because of the commercialization of shipbuilding, and then the GRP facility that they have. GRP is glass reinforced plastics. So they are not only going to be producing, but they will also be selling things like, patrol boats and crew boats and security vessels. It's also here because it's a very strong blue economy policy agenda of the government. And new ministry that was also set up, the Ministry of Marine and Blue Economy. So there's a public policy push that supports where Caverton is. So Caverton, once it goes into commercialization, and then it goes into making of these GRP products, it's not going to remain a 6 naira 20 kobo stock. The next one I'm watching is Abbey Mortgage Bank. As at the day of this research, it was 7 naira 10 kobo. And then Abbey is here because of the housing tailwind. There's a whole lot going on with the Ministry of Housing, and there is a lot of changes and then policy changes coming to make it easy for Nigerians to rent to own, and then a lot of other federal mortgage bank products that they would be leveraging. So federal government is focusing on expanding access to home ownership and mortgage product in 2026. When that happens, ABBEYBDS might not remain a 7 naira 10 kobo stock. The next one on the list is Livestock. And it is here because of the new ministry. There's a new ministry called the Federal Ministry of Livestock Development, established 2 years ago, not up to 2 years ago, with the mandate to transform that sector. So that is a sector tailwind that makes this a very, very interesting candidate here. And it's got a couple of greens under it and then a couple of ambers. And then Japal Gold is one stock I really haven't taken interest in for years since it came up, because I can't really say anything about the profitability of this company. And then sometimes there's a whole lot of noise about this company. At the end of it, it seems to fail to deliver. But it is here also because of the blue economy, and also because of the signed 26 billion naira signed mining contract for Gracefield Island. Is still within the timeline. So there might be a breakthrough for Japal Gold. CI Leasing is extremely inviting, and you can see so many greens in the legend under this particular stock. Why? Particularly because of its strategic expansion plans. They are planning to acquire a majority stake in Ghana's Lease Afrique. When this happens, CI Leasing is very likely to skyrocket. Chams is a darling, especially because it is here because of the pre-election digital infrastructure that is inevitable in making these things happen. There's also expansion plans into other countries in Africa. So this is a stock to watch at 4 naira 20 kobo currently. Cutix is also a darling because as long as there is construction narrative and then as long as there is a lot of demand for power, cables and wires, they will continue to ride Nigeria's build cycle. So Cutix is there. It's a very solid company, very, very solid product, always in high demand. And then they are also planning for expansion to other African countries. Last but not the least is Cornhall, which at the time of this research was 4 naira 67 kobo. Cornhall also benefits from insurance recapitalization. And Cornhall has been doing very well. Its filings in recent times and then dividend payouts have been very, very exciting. So Cornhall is a beautiful one to watch. The policy tailwind is measurable. Recapitalization pressure will separate survivors from weak balance sheet. And Cornhall has a strong balance sheet. So here you have them, the 16 stocks that could actually make you a billionaire in 2026. I've removed the any excuse you might have not to improve or astronomically improve your financial stakes, your net worth this year. And so if you are not in the financial fitness challenge, please go there because you're going to need this full document and also the next steps to be able to turn this into real money, because now you have it. But what is your action plan? What are you going to do about it? How are you going to take advantage of this? How are you going to position? How are you even going to find the money? These are the things that you gain or you benefit from the Financial Fitness Challenge, My Wealth Mentorship Group. So go to the section and then click on the link to join, and then come and join the community where we want to 10x our total net worth this year. And whatever happens, keep showing up because you never know what's coming your way next. And I'll talk to you in the next video.